Welcome. In this video, we'll cover a couple different things, but primarily making binary decisions and how to track the binary decisions so that you can further develop your edge in trading. And we'll jump through kind of an example trade, but then the majority of this will be talking about journaling and then how you can use a spreadsheet for journaling. And there's access to the spreadsheet down in the description as well. And this conversation really comes about from one of my one-on-one coaching calls that I had last night, where one of the key things we talked about was making binary decisions and then how to properly track those kind of in a very inexpensive non-trading journal tool way. I'll talk about trading journals here in this video, and I'm sure I'll do a future video of a couple trading journals that I recommend that track the important things that you need to track for developing an edge. Let's first jump into making binary decisions. So before I do that, I'll talk about, or in conjunction with that, I'll cover a video that I did a while back was how to use Trello for journaling in your trades. And journaling is one of the best ways to grow as a trader. But there's a couple challenges with journaling where you're doing a journal like this in Trello, and you're looking at an example journal trade here, where this is a journal for my algorithm trading in the Forex market. And you see that here, the information that's here, this is different than what I shared in that video where there's a template that I share in that video that you can copy and paste that you can use to answer these questions. But here I'm using really a specific feedback for my journaling to track this trade. And it's based on indicators. The challenge with this is that it's hard to actually get the raw data out of this, because let's say I have a lot of winning trades and I can look at those winning trades and I can go in a journal like this and I can try to find out, well, what factors played into those winning trades? Even if you're not trading off an algorithm, just your thinking process and your binary thinking process that really get down to raw numbers. I guess you could say science. That way, there's no arguing it. There's no arguing raw numbers when you are making binary decisions, and then you see on most of your winning trades, there's a couple decision factors or data points that those winning trades share. It's hard to do that in a journal. So the journal side is typically good for psychology and building on your number one thing. But when you really want to dive in, you want to have something, even in a simplistic way, is a binary decision. And when I say binary, it's a yes or no decision. A binary decision that can be tracked, that you define based on your trading style, the indicators that you use, your charting style, and everything else. So before we jump into that and how to do that, let's just cover an example trade and talk about binary decisions, because this is one of the biggest challenges that traders have, which is making a binary decision. So let's say we're looking at BAT. BAT is something that you should watch in the crypto market, because I think the chart shows that the community is well engaged and the community buys these pullbacks. And until they don't do that anymore, then I would stop buying these pullbacks. I did not buy this pullback because I thought I would go down a little bit further. My entry actually was down here at the middle of this range here. So I was a little late, and I didn't add to it because I didn't have confidence that this move was going to happen like this. But I'll be watching BAT a little bit more and really breaking it down at lower time frames. But let's say that you did take this entry here. Let's say that you did get in here. Now, what's happening right now in price action, this red line that you see here, let me scroll in so you can see it really well. This red line that you see here is the weekly open. And we are getting kind of the first reaction that we would expect, which is it bounced off the weekly open, or it found resistance at the weekly open. So my first binary decision at this point in time is real simple. If I entered this trade here, my first binary decision is, does it close above the weekly open? If it closes above the weekly open, that's a good sign. Binary decision, stay in the trade. Let's say that, let's actually go to a lower time frame. See, this is where, like I said, a lot of traders get mixed up because they're in a trade and they're not setting price positions or price points for making binary decisions. So I'll provide a couple other examples of binary decisions in here and how they could potentially play out. So let's go to another binary decision that you could make. Let's say, so these two lines here that you see here, the green, not the green, but this orange line and then this purple line, those are EMAs. So the purple is the 14 EMA, and then the actual orange line is the 99. Now there's a black line on here because I've just, to save my eyes, I've kind of moved over to darker charts. And then the white line now is the 24 EMA. So these are all converging, these EMAs. So one binary decision that you can make at this point in time, instead of waffling back and forth, let's say that the weekly open, it does not close solidly above the weekly open. So we're on the 1 hour time frame. So one thing that you could say is that if it closes below these moving averages and the 200, I'll take half off of this trade. And then I'll move my stop loss to break even. You probably already have your stop loss at break even now if you're that type of trader. But then that would be a binary decision. Now let's say that it does move down here and it does something like this. Like right here. It does something like this. It finds support below the 200. Now you could say I'll give it 4 hours to find support below the 200. If it doesn't find support below the 200, I'll get out of the trade. Binary decision. Yes or it's not a yes or no. It's really kind of a stick in the mud. I don't know if that's the right term I want to use there, but a decision where you're going to stick to the decision and it's very clear cut. So that would be another way that you can make a binary decision. So you could say not just a close below the 200, but I'm going to give it a little bit of time to find support there. And you might even put a percentage below that. So a clear close where it's, let's say here, wrong button, wrong tool. Let's say 5% below. If it closes 5% below the 200, then I'll get out of that trade on the 1 hour time frame. The key with binary rules is that you should make them, you should follow them, and at this point in time in the trade, I'm not making them as it's unfolding. You can make it as it's unfolding, because obviously I made the weekly one as this is kind of unfolding, but you shouldn't be making it. You really shouldn't be making it at the point where, put it this way, you shouldn't be making it at the point where that it's happening. And if you are making it at the point that it's happening, then you need to make a binary decision and stick with it. So these binary decisions, you need to start thinking in this way. That way you're not surprised. That way, because what do we have so far? We have, right now, so far we have the weekly open. If that gets rejected, what's our next point? What's our next point of price interest? Our next point of price interest for a binary decision is here. And what's our binary decision? If it closes below the 200 on the 1 hour time frame, we'll get out. The amendment we can make to that binary decision, we can't do either or, so we have to do either or. So it either has to be it closes below the 200 EMA and these other EMAs, and it's over 4 hours of price action with no support or just not a strong reaction to the upside, then I will get out of that trade. Now, this is the other thing with crypto, especially in crypto, more so in other markets, in Forex as well. I would put Forex into this mix, is that there's nothing saying that if it does do that and it spends a little bit of time there and then it crosses the 200 and finds support, you can enter again. And then maybe enter again, you're looking for a target above the weekly open, and then maybe you're looking for something right around 30%, something like that. So you have to be flexible, but then you also have to make sure that you're following your binary decisions. So this is an example of the ongoing binary decisions that you'd want to make for yourself, and that you would want to put in your journal That way you're journaling and thinking through your decision process. So you can go back and see whether or not your decision process is holding up. So that's what I would suggest. If you're journaling and you're wondering, what do I journal for my trade management? Well, this would be the type of stuff that you want to journal for your trade management. Outcomes, binary decisions, what you do, and then you can go back a day later and you can say, was I right? Was I wrong? Did I read the market right? Were my binary decisions right? Did it completely unfold in a different way? Maybe I have to make binary decisions a little bit differently. Here's another way using dynamic value channels. So these lines here are dynamic value channels. And I've got the sub channels on there. And the one thing I see here is a couple things. Is that this is another way that you could mix in a binary decision, which is this value channel here was used as support, closed above that, and from that support area, it bounced up. Let's see where there's other dynamic channels. So there's another dynamic channel here. It broke through there. So another binary decision, and this aligns with these EMAs, is that, well, if this channel breaks, then I'm out of that trade, or I take half off my trade. And then the next decision in conjunction with binary channels is that, well, here's the 200, and if it closed below this channel, then I will get out of that trade. I will completely get out of the trade. Another thing that you could do is, because this blue line is a stronger channel area, for those that aren't familiar with value channels, I have plenty of videos on that. And I have a video on this indicator called the dynamic price channel. So you can find that on my channel here. But this blue line is a bigger point of support or resistance using value channels. So the other binary decision, and you could be making this all the way down, but I would say you have to choose one of these three. So your final binary decision would be, if this channel breaks right here, I'm out of this trade. Which, if you look at this, it allows these moving averages to be used by traders. It allows this support area to be used by traders, this support area to be used by traders, the EMA to be used by traders, this support area to be used by traders. And then from here, your trade's been pretty much invalidated with even the daily open. There's the daily open right here. So it broke through the daily open. So there's a lot of key levels and key things that other traders would be looking at that basically it just blew right through. So this is probably a good binary decision point, which is, if this value channel area gets broke and solidly and stays broke, then I'm out of that trade. So that's another way to make binary decision. And you can include all these, but ideally what you want is, when you pull up the chart again, there's no really not decision. There is decision, but there should be no clouding of your thinking in what you're supposed to do. It's very clear. So this is also why, when you're in a trade and you're entering a trade, you're doing the same type of binary decisions on how it's unfolding and what will happen in the upside and what will happen on the downside. You should look at both sides. So this is kind of an example of thinking in binary. Now, how do you track this? This is where you'll have to look at your own trade system and how you trade, and develop a system in order that you can capture the data that will help you realize where your edge really lies. And I'll give you an example, and this is an example from this spreadsheet. Is kind of a simple spreadsheet for a trading journal. And you'll see here, this is for the crypto market, and it includes the ability to put in your entry price, your time, the pair, and also track it as well, and then really look at what you're doing. But then where the binary decisions come is the second half of this actual spreadsheet. And I just added this here today. So if you have access to the spreadsheet and you've copied it and used it on your own, you probably want to recopy it, or I don't know if it brings in these changes. I don't think so. But you probably want to recopy it and set it up in a way that is congruent with how you trade and the indicators and the decision points that you use in your trades. I'll walk through this right now. So generally, this second half here is these binary decisions that cover setup, discovery. You'll see here I have EMAs. I have the trade time frame. I have a value channel. I have indicators that I use. I have my stop loss, how I decided the stop loss, and then I have weekly levels. So this is an example of the type of data that I want to be capturing for my trade entries. Now, one thing I'll suggest, and I'll give some general suggestions. A lot of times you're going to use shorthand for certain things, like here, TV scanner. Or here you're going to use a specific vocabulary like swing value channel support, just because you don't want to be doing sentences for this type of data. You want it as short as possible. So one thing I would suggest you do, and this is a general suggestion, is you can do this two ways. You can put a little note here like I have here, and then you can just add to your note as you add new definitions. That way, and you would think, well, I'm not going to forget what TV scanner is. Look, make this so that in 1 or 2 years you can read this and you don't have to, if you don't remember what it is, you have a definition, but you should make it in 1 or 2 years, you know what those definitions are. But the human mind often thinks that it can remember things. And oftentimes, if you're not consistently using it and you're not consistently going back to it, when you go back to it in 1 or 2 years, you might completely forget what a shorthand is. So the other thing that I would suggest is there's another spreadsheet in here called shorthand definition. And then here, when you use a new shorthand or you use a new term, just go in here and explain it. You can explain it as much as you want in as detail. You could even maybe have a little link to like a chart that would maybe explain it as well. But here, for instance, I have TV scanner, trading view scanner, swing value channel support, swing trade where support is found at the bottom of a key value channel. And then this ATR definition is using value from the last closed candle and main time frame ATR 1.5. I probably should even describe that a little bit more because that it does make sense. I probably should just put main trade entry time frame. That way it's just more clear on exactly what that means. So let's jump into how you use this type of spreadsheet. And it's really simple. You want to not only define the things that you use, but then you want to define the values that are acceptable for that individual trade. So let's say, I'm not going to jump through a chart, but let's say that we entered TRX BTC here. And these are our binary decisions to enter the trade. So the first thing we say is what type of setup is this? And let's say swing value channel break. Now what is that? Well, basically it's a swing trade and the channel, the upper channel has been broken and it's closed above that break on a confirmation. Now I would put that in my shorthand definition so that I know what that is, but this is the type of trade that I do. So it's a swing trade and it's based on a value channel. So that's the main setup. Now there probably is other indicators that went into that or other things that happened on the chart that I want to track. And that's what these examples are. So the first thing is, how did I discover this? Well, let's say that I discovered this from, let's say someone in my Discord group. So let's say someone in my Discord group shared a chart and I'm like, and I looked at it and said, yeah, that looks good. So I would mention that as my discovery method. Now here on the EMAs, what I'm really saying is that this is how you would track this, is that, okay, is price above the 21 EMA? It's above. Is it above the 24? Above. Is it below the 50? It's below. Is it above the 200? It's below. And then here, these ones are EMA crosses. So is the 24 above the 50? It's above. Is, let's say, another way that you could do this, crossing. So really there's a couple different things that you would have for like these type of EMAs. You'd have above, below, or crossing. That means price crossed it. You could say crossed too. That close of that candle that you entered on, it crossed the 24 crossed the 50 EMA. Now here is the 24 above the 200, you would say below. And as the 50, it's below. So you see, you're saying, is the 50 above the 200? No, it's below, because basically everything's below the 200 at this point in time. So we're trading below the 200, but these other EMAs were above. So if we go to, I guess I will go to a chart just to make sure that this is very clear. It should be clear, obviously, for anybody. So if I entered this trade back here, right here, on this candle here, well, this EMA is the 14. This is the 24. So this trade would be that price when I entered, the close, or where price was. It's where price was on my main time frame, and I'll go to my time frame here in the spreadsheet in a second, was above the 14, was above the 24, was above the 99, and was above the 200 on this trade. I guess I should have used BAT for this example. And then to go further into that, I would say the 24 or the 14 is above the 24, and the 24 is above the 99, and the 99 is above the 200. Now, I don't have that in my spreadsheet here, but it will depend on what EMAs you use and how you want to track it. Because then you can go back and run reports and data on this, and you can say, well, when I do a swing value channel support trade from the TV scanner, and the 21 is above, or the 24 is above the 50, these trades work out. Or when price is above the 21, but below the 200, I have a win rate on those of about 50%. That's the type of stuff that you can do with a data analysis and something like this. Now, the next part of this is your time frame. So how this is laid out here in the way that I do it is that this is my primary trade time frame, meaning that I'm trading off the daily chart. And then my first drop-down entry time frame or confirmation, the first DEC, this is why you should have, if you put an abbreviation in there, you should note it. So if you go back, you know what it is the 4 hour and then the 1 hour. So basically, my scanner or whatever I'm using and my main charting, I'm looking at the daily. And then when I go to actually make a trade entry, I'm looking at the 4 hour and the 1 hour to really refine my entry criteria to make sure that what I'm seeing on the daily time frame holds up on these lower time frames, or to get a better entry. So this could be blank, but this would be following your trade process. So it's a trade process, and you can say, well, I'm using the daily, I dropped down to the 4 hour and 1 hour, and they all aligned with what I was looking for, and it means that I should enter the trade. Your value channel. Now, what this is basically how I define this, and this is very my trade style. See, what you want to do is whatever you look for in your trading, this could be, let's say that you look for swing low or pivot low. Let's say pivot low. So you're looking for a pivot low. You might say above pivot low. You would say above. You would just say above. Sorry, above. Meaning that the previous pivot low on maybe the daily time frame, it was above it. Maybe you find, though, that you find good trades when it's below the last pivot low that you have on the chart. So that might be that maybe in the way that you trade, you're using pivot lows. I use value channels. So what I like to capture is bottom main support. So that means a main value channel at the bottom is finding support. Now, that should be obvious with people that use value channels. The next section of this is a particular indicator. So for instance, the TSI MTF, let's see if that's on the chart. That is right here, TSI MTF. So see that's this indicator right here, this 1, 2, 3, the third one down. So see how this indicator right now is green. These are custom indicators that I have. Even this guppy is a custom indicator. But see how this is green? Well, that's a bull bias. See that arrow or that triangle right there? That's a bull signal. So that basically means go bull, go bullish. And then this means that it's in a bull trend. Same with the RSI EMA. This black triangle is a bull signal, meaning go long. And then as it's green, that means it's a bullish sentiment. So when I go to my chart for my indicator, what I do is I would say, I didn't do this here, day, for hour, 1 hour, bottom, main support. My TSI was a bull, was in a bull sentiment. My RSI was a bull, was in a bull sentiment. So if it was a signal, if that candle close had a bull signal, then I would make it a bull signal. And it's obvious that if it's a bull signal, it has a bull sentiment. So if I entered that trade and the RSI EMA had a bull signal, then my what I would put there is a bull signal. And then my 10-5 weekly, let's look at that. That is in, see how it's red? Well, it's not quite red, but that's this one. Oh, that's the weekly bias. Sorry, I don't have that indicator on this chart. If I had that indicator on this chart, then let's say that that indicator, let's just say that that was painting bearish. So I would say bear. So it's a bear sentiment. The next thing is, how did I define my stop loss? So let's say for this trade, I used ATR 1.5, meaning that I took the ATR on the daily time frame and I multiplied it by 1.5, and that's where my stop loss was. Now, here's the next thing. I use weekly and daily levels. So another thing that's good to track in something like this is where are you at on the weekly level? Well, on that trade, if we looked at this BAT trade here, we entered that, we were below the weekly level. So what I would put here is below. It was below the weekly open. Now let's say that I entered this trade here and the weekly low is right here. So the weekly low is right there. So I entered it above the weekly low. So it's a little hard to enter below the weekly low. I mean, you're really hitting the bottom. So this one doesn't make quite sense because usually you're above the weekly low. It's hard to be below the weekly low because you're buying on that week. So it's kind of more relevant on the daily. Or on the daily, you can say, let's say I bought that there, and there on the daily time frame, I was below the daily open. So here, it was below the daily open, and it was above the daily low. So that's how to fill out this sheet. Now you want to have your own indicators, your own trade decisions. You want to put them into a kind of a binary rule system and really use shorthand and make sure that you're using the same shorthand throughout, because I'll show you the next step of this. Now, I'll also mention that this is Google Sheets, and the reporting in Google Sheets isn't as good as Excel. Now, Excel, you can do some things, and I'm going to geek out here on Excel and everything else, but Excel, you can do some better reports, pivot reports, and other things. But it's still limiting. There's some tools that you can import or you can export from Excel, or you can upload your Excel spreadsheet or your Google Sheet. It can take this raw data and create super reports. I'll probably do another video on that, but that goes well beyond this. And then get 100 to 200 trades underneath your belt and then get to that point, because what I'll share with you here is how to make this a lot easier to then go through and identify some of the trades you should be paying attention based on you filling this out. So you see over here, I already have some highlighting rules. So if it's a win, it's supposed to highlight green. I don't know why it's not, or it should be a P, sorry. If it's a profit, then it's green, and if it's a loss, then it's red. So I already have key highlighting rules there. Now, what you can do, if you're not familiar, I'm sure you are, but if you're not familiar with this, one simple thing that you can do to make this a lot easier to then scurry out the things that would identify where you should maybe spend a little bit more time or where your edge is coming into play is, let's look at our EMAs. One thing we can do is we can go to Format, and we can go to Conditional Formatting, and then we can add a rule. So for instance, we can say if text is exactly, and this is why you want to use the same text throughout, is above, meaning that it's above the 21, we want it to paint green. Now we can then go to, let's go to the one that has below. So this one has below. We just add another rule and we go, is text exactly below? I'm sure you get it by now. And then we want to make it red. Now I'll share with you one other trick that you can do, but I'm going to set up one more rule, and this is on the crossed. So see, this one here says crossed. So here I'm going to add another rule, and I'm going to say text is exactly crossed, and then I'm going to make this so it's a different color, and then okay. Now what I can do is I can go to this rule here, and then I can hit this button right here, and then I can say add another range, and then just select the Y, and then it'll add those rules to that range. So I want to do that for every one of my rules. So here I want to do the same thing, and then add another range. I can't replace it, so let me do this. Add another range, select the Z row. I don't know why it's not selecting that for some strange reason. Well, I'll just type it in. Fine. We'll just go around it. So here, now this is where you'd want to then copy each one of these rules. So it's pretty obvious. You just want to go to then your next rule here, and we go to format, and then we go to conditional formatting. We select this row, and then we go here, and then we just add another range, which would be just here, and then say okay. So that's how you can set up one rule that has something like that. So then I can easily go back and I could then filter on maybe just my winning trades. So I could add a filter here and say, just show me my profitable trades. And then what you'll get is just your profitable trades. And then you'll have a kind of a visualization of when you see a lot of congruent factors on your winning trades, you'll say, well, obviously when I'm trading above the 21, and it doesn't matter if it's a below or if it's below the 200 or not, these trades are profitable. So you would do this kind of the same thing here as well. You would do the same type of rules here for your indicators, is that you want to define indicators that it could be a cross, but there should be some type of bull or bear bias on your indicator that is giving you. It could be a momentum indicator too. It could be a volatility. So maybe you might have a volatility indicator, and then that volatility indicator would say high, low, or medium, meaning that, so let me just add a new column here. So we'll go one to the left, and let's say I have a volatility, let's say volatility EMA. So that's an indicator that I use. So really there's three readings on that indicator that I really care about, which is it high, is it low, or is it range? And then you do the same type of thing here. You just, to format your rules, is text exactly, let's go back here. I don't know why it closes that when I do that, conditional formatting. So let's say that it is text is exactly high, and maybe we want that to be red. And of course you can make a custom color. And then obviously if it's, you get this already, I'm sure, but if it is low, then we want it to be green. Maybe the way that we look at this volume indicator, volatility indicator, shows that when it's low, that's a bullish sign, or that's a sign to get in. It's probably not, but that's probably backwards. But like here on my TSI MTF, my formatting would be obvious. If it's bull or bull signal, then I would want it to be red or green. I would want it to be green. I'm confusing myself because obviously I want to make sure that it's a bull signal. So that way, if I zoom out here, or if I make this, I don't know why it's not. If we make this so I can see the full screen, then I can really look at this and I can say, okay, well, I get a good feeling as let's imagine I had 100 trades in here. If I have 100 trades in here, just the color coding alone, I will be able to see kind of a trend in where things are aligning. If I don't, then I probably need to figure out, well, why is my trading all over the map? or the things that I'm tracking in a binary decision making process is kind of still up in the air. So that's something to kind of look at when you look at this. So if you can go in here and color code this, then when you go back and you look at it over the series of trades, 10, 20, 30 trades, you'll see, and especially when you divvy it up between losing and winning trades, you'll start to see patterns. You'll start to see things that really will pop out to you. That's really what happens when you do something like this. So I hope everything that we covered here, from binary decisions to trade journals to then recording this in a simple spreadsheet, makes sense. And I definitely would color code it. And then, like I said, there's other reporting that you could then dump this into, and then you could get more granular with your reporting without having to, it would get beyond just looking at colors. You'd be able to get real data. So if you like this video, definitely hit the like button down below. If you're not subscribed, you want to subscribe now. I will mention as well that I do have training. I get asked that. If you're interested in learning the fundamentals to trading and the ability to create your own trading system so that you have an edge on the market, the best way to get started with that is you can check out my website. That'll be linked down below. But also join Discord. So there's a link to the Discord group. Send me a direct message and then I can share how to get started. I have started one-on-one coaching here. On kind of a limited basis. So I'm very selective on who I really want to one-on-one coach. But one of the requirements for the one-on-one coaching is keeping a trade journal and really exponential growth. That's what I'm looking for. So that's my expectation from being a mentor for someone else, is that there's exponential growth in your trading. In addition to a couple other kind of agreements between us on how that mentoring will go. So if you're interested in that, definitely get in touch on Discord, and I can share how to get started with that. That's all for this video. I look forward to seeing you in the next one.